Costco has quietly grown into one of the biggest clothing retailers in the world, with a nearly $10 billion apparel business.
Ladies, do not sleep on Costco.
Come shopping with me at Costco, except I'm not here for food, I'm here for the clothes.
The Columbia fleece that everyone went crazy over is back at Costco.
Costco has really grown its apparel business over the past several years. They really offer tremendous value. They don't have a lot of items in the store, but what they do have, they buy it deep and they can offer very low prices to the consumer.
So how did a wholesale member club known for $5 rotisserie chickens become a formidable force in fashion? Over the past 5 years, Costco has grown its apparel sales by nearly 40%. That's more than its competitor BJ's, who grew the segment by 28%, and Sam's Club, who grew by 21%. Its apparel segment is also larger than Gap, Calvin Klein, Tommy Hilfiger, Abercrombie & Fitch, and Old Navy. Costco's success hinges on a mixed offering of its beloved private label, Kirkland Signature, along with popular brand name products.
When they put their Kirkland brand on it, they can get very aggressive with low price. And they do a very good job of bringing in brands. You know, you can find Gap products, you can find Lucky Jeans, you can find Levi's, and that's helped, convince the member to step up and buy.
In its latest fiscal quarter, the company reported men's apparel sales to be up double digits.
Most of what Costco does is partnerships. So it's lines that are made specifically for Costco. Often Costco lines in branded apparel may be slightly different to the mainstream offer that's in stores of those brands. So it's a bit of a diffusion line.
Licensing is another way for big brands to get onto Costco's shelves. A May 2025 report from Women's Wear Daily said that the Saks Fifth Avenue brand name would be licensed to Centric Brands to sell men's apparel at Costco. But sometimes Costco's merchandising is less streamlined.
A lot of times you'll see in social media, Costco had this particular, brand that they never sell it in their Costco store on a regular basis. It's only in a handful of stores because they may have gotten it in an opportunistic way. There could have been a special overrun at a particular vendor and they sold it to Costco. Other times they might buy it from another retailer or a third party that may have excess of that item.
That could explain why Birkenstocks are available on Costco's website. Yet the company told CNBC that it does not sell directly to the wholesale club. Costco declined to give an interview or comment to CNBC for this story.
Costco's apparel business is pretty no-frills, like the rest of its stores. But people like that there's a treasure hunt appeal to it, where you go in, you may not know what kind of brands there will be, but it may be your favorite brand or a higher-end brand, or they're leaning into private labels.
One of Costco's secrets to success is its private label. Kirkland Signature often utilizes popular brands to manufacture its own version. Sometimes it even advertises these partnerships, like in the case of Ocean Spray Cranberry Juice or Reynolds Aluminum Foil. But it's typically intentionally unclear when brands do this. Kirkland Signature was formed back in 1995. Since then, it has gained a cult-like fandom. And its branded clothing has become a trend.
Kirkland in general has been known for a bit of a dad chic element, but over time, with the help of social media and the fact that so many consumers are proud when they're value conscious and they find a good deal, it's made the brand cool. So it's not just known for having its name on things like paper towels, but also sweatshirts.
Who is buying Costco clothes with the actual Costco logo on them?
It's me. I am.
Look what I got from Costco today. Bam! Kirkland Signature sweatpants.
I don't think that, the actual logo product business is enormous for Costco in the scheme of things, but actually I think has exposed the Kirkland brand and the fact that Costco sells clothing to a lot of younger consumers because it's social media where these things are circulating.
But Costco has also been caught up in some legal drama with its apparel business. Lululemon sued Costco in 2025 for allegedly selling replicas of its clothing at a cheaper price point. And you know how brands will sometimes secretly manufacture for Costco's private label? Well, that came up in the lawsuit too. Lululemon claims Costco's ambiguity in its sourcing leads some consumers to believe that its products are being made by Lululemon. It alleges that Costco did not shut down these rumors either. However, most of the products in the lawsuit are not even the Kirkland brand. Experts say that could undermine Lululemon's argument. Still, there could be a silver lining here for Costco.
It's also been one of the most fantastic advertising campaigns that Costco could hope for, because it's drawn enormous attention to the fact that Costco have all these clothing lines. I think it's a real strategic misstep by Lululemon, and I don't think it will bother Costco very much. Costco's like the family favorite. It's the retailer people like. And Lululemon looks kind of uppity, coming in and trying to take a pot shot at Costco.
Now, if there was anybody that was doubting the quality of Costco, folks, now they're looking twice.
The fact of the matter is shoppers love dupes. They love finding a deal. And for a long time, it's not just Costco, but many retailers have played that game. And so I think what the lawsuit may tell us is that competitors, even big name apparel competitors like Lululemon, are taking Costco more seriously.
Costco's main source of income is from its membership fees. That's how it can keep prices so low.
Costco shifts enormous volume. And if you have low margins but enormous volume, obviously you can generate very significant profits. So that's the way the whole model works. It's volume driven, but the savings they make on the economies of scale, because they've got membership income coming in, they share those with the consumer.
Gross margin is a company's net sales minus the cost of goods sold. It's a common measure of profitability in the retail world. Target and Walmart both fell in the 20 to 30% range in their most recently reported fiscal years. Costco's gross margin, on the other hand, has hovered around 10% over the past few years. That's because Costco doesn't mark up its products very much. Industry markups vary greatly, but a general rule of thumb is about 50%.
Costco is able to keep it super low at around 14% as an initial markup. Everyone, investors, analysts, are always asking them, well, couldn't you push it to 15 or 16%? And yeah, occasionally maybe they do, but that's the magic. They really are very sharp on that. They have this real fixed line right around 14 for the vast majority of items that they sell, and that keeps the price very low.
In its 2024 annual report, the company said its investments in merchandise may include reducing prices or holding prices steady to drive sales and remain competitive, even if it negatively impacts their margins.
What's really interesting, of course, is although a lot of what Costco sells is quite cheap and quite low price because it's essentials, Costco pushes up into really expensive stuff, like really expensive bottles of wine, diamond rings, but the philosophy remains exactly the same. You might be paying $10,000 for this bottle of wine, but you'd probably pay $12,000 elsewhere. So it's still, paradoxically, great value for money. That's the Costco way.
But Costco's stock performance has been volatile in the short term. Despite a strong start in 2025, it has underperformed the S&P 500 over a one-year period. One explanation could be that investors are selling to use its gains to fund other investments, because over the long term, Costco has been a strong performer. Costco sells mostly consumer staples, but with lowering interest rates and a recent resiliency in consumer spending, some investors may look to pivot back to more discretionary names. Plus, Costco is already a very expensive stock. Costco's price-to-earnings ratio, a measure of investor confidence, is high, even compared to successful competitors like Walmart and BJ's. But when the multiple is high, it can lead to increased volatility, as investors are less willing to accept risk.
Every time a company does well, it keeps raising the bar, and investors want to see more and more. And it's hard for them to keep topping expectations. And so that means even though it's put up strong sales results, even though it's in some ways insulated by some of the tumultuousness of tariffs compared to other retailers, it's still being held to a pretty high standard.
As with most retailers, Costco has been impacted by higher costs related to tariffs. But the company says it has an advantage. It has diverted some US-bound imports to clubs in other parts of the world. That is coupled with the fact that it simply doesn't carry that many brands relative to a retailer like Target or Walmart, and can therefore swap out inventories pretty easily. But experts say a higher tariff environment will eventually catch up to Costco, forcing it to increase prices. The company's stock has been a long-term winner, though. Over the past 5 years, shares are up around 150%.
One of the most basic ways to measure a retailer's health is whether they're opening new stores. And for Costco, it has, both domestically and globally. It's stuck to a pretty aggressive expansion plan. And so that's given investors confidence that it has a runway for growth both now and into the future.
But if you look at that stock chart over time, it's generally up. I mean, it's exactly what you would want a stock to look like. And it's generally a strong performer. We see continued market share gains. We see the stock continuing to be a core holding for most investors.